All right, guys. So this is the trade that I took yesterday. As you can see, I didn't catch the whole thing, but this is a crazy move. And I've been telling you guys on all my videos, these moves are being caught all the time, right? Now, the fact that I'm not catching all of the trade does make me a little, it does annoy me a little bit. It does annoy me a little bit, but I understand that's just a part of the game, right? Now, there is a couple of ways how I can start holding on to this that I'm gonna start testing out. I'm gonna explain it right here, but I'm not gonna really like put it out and tell you guys that this is a way that you can actually make a whole bunch of money with holding on to trades longer, because I have to test it out first. But this is the trade that I took. Okay, now it's a very, very clean trade. As you can see, it was the beginning of the downfall of AMD. And let me break down why I took this trade. And I'm going to use the three simple key elements that I use in every single video that I need before I take any trade. And I've been catching these trades all week. So you can check out my other videos just so you know that I'm actually legit and I'm not lying. But let's start with the first thing. So the first thing, of course, is going to be market structure. So market structure, obviously, if we look at this, even on the 15-minute, market structure is bearish, right? So the market opened right here. So let's ignore this long candlestick and let's just see from here all the way here. We obviously can tell that the market is bearish. So for market structure, we already know market structure is what? Bearish. So we can put bear right there because we know the market structure is bearish. So since the market structure is bearish, what do we want to look for? We want to look for supply zone. So supply and demand, we're looking for supply because market is bearish, right? It would be kind of dumb to look for a cause or for a demand zone if the market is bearish. So once we understand that the market is bearish and we're looking for supply zones, now it's time to look for valid supply zones, right? So right here, if I look at the 15-minute, I see that we have this valid supply zone right here because this candlestick right here, let's make it a little lower. This candlestick right here was the cause of this change of character, right? This shift. This was where the buyers, I mean sellers were selling, right? Last time price was up here, we started selling off like crazy, right? So of course we know that this is a valid supply zone. Not even that. If we look at this on the 5-minute, we know that this was the last low. No, the last low. Uh, it's kind of confusing, but I would say the last low is here. So this broke this last low and it created that bearish structure. So at this point, I know that this is valid at this point. So now all I'm looking for now is I'm waiting for price to tap into that zone and I'm looking for an entry. So entry model. So entry model. Okay. So entry model. Okay. So now at this point, like I said, I'm looking for an entry model and that's the last thing I'm looking for. So as you can tell, that all was before market opens, before the markets open. So when the market opened, as you can see, 9:30, it came right up here and it rejected perfectly. So let me actually show you guys. So it came up right here and it rejected perfectly. Now, of course, the better entry would have been if I entered up here right off the rip. Once it tapped into here, like this right here, would have been just the better entry in general. But I didn't take this trade because um, it was moving too fast. And not even just that, I had to wait for a little bit more confirmation. And that's just another thing that I realized is I started hitting more of my trades when I started being a little bit more patient, not hesitant, but patient to wait for the candlesticks to close to give me more of a confirmation. Now, the reason why this works so well, in my opinion, is because if you enter too early, there's a risk of you getting faked out or you getting stopped out because the candlestick still isn't done. The buying pressure still isn't done, right? The sellers still haven't fully came in. So let's say you were to get in a little early, like let's say I was to get in right here. Let's say I was to get in right here. Let's say right there, I was to get in right here, and my stop would have been right over. Let's say my stop would have been right over here. So at this point, this would have been my stop, something like this from here to here. My stop would have been here. So imagine if I just got in because I wanted to get in early. I didn't want to miss out on the trade, and then I would have gotten stopped out, and then it would have reversed, and it would have done something crazy like this. That's why for me, and I give this advice to anybody that I teach how to trade, is it's better to be patient and catch something than to get try to get in early and catch nothing. Like that's the best advice that I would give anybody when it comes to entry models. Like I said, when it comes to risk entries, of course, there's gonna be times where you take a trade right off the rip, right when it enters, but you have to be okay with that. Like you have to say to yourself, I'm okay with taking this trade right off the rip, taking this risk entry, this or aggressive entry, as people like to call it. You have to be okay with taking that trade. It can't be something you just do off of emotions, right? You can't just say, "Oh, I'm gonna enter because it's in my zone. Let me just enter it. Fuck it, like fuck it." No, it has to be something like, "Okay, if it taps into this zone, I'm gonna enter right when it taps in. I've agreed. I've agreed to that." So that's kind of where I go from there. But yeah, like for me, I've seen way more success when I wait for the candlesticks to close and give me some bearish momentum or some selling pressure or buying pressure, depending on if we're in a demand zone or not. But yeah, so as you can see, that's what ended up happening. And as you can like, of course, as you can tell, it wasn't the best trade in the world. I mean, if you can tell from here. But the reason why I didn't hold this trade longer was because it was Friday. And if you know anything about trading options on Friday, you know that the contracts expire. So um the thing with that is that I could have, like, this could have went in my direction, but I didn't, like, I'm not in control of how much consolidation it does, because I've been in trades before where it does stuff like this and it just does this and then it finally hits my target, but I'm up only like 3%. Like there's really no point. There's really no point in like holding on to trades like this, or it'll stop me out and then I lose more than I was intending to lose. So that's the only reason I don't like zero DT, because of that. And that's why I set really tight stops and targets when it comes to zero DTE. But nonetheless, it was very good. If I didn't trade zero DTE, then I probably would have had my target right here, which still I would have missed out on a lot. But that's where I want to bring in the next segment, where is holding on to trades. So what I've been seeing recently was a lot of the trades that I've been taking, and I'm not a big fan of using indicators, but when it comes to like getting that extra squeeze off of a trade, I've been seeing that indicators could, like, I could probably use indicators as like a form of holding on to trades a little bit longer or re-entering trades that are already dropping, because I've had in the past week, I've had a lot of trades that have gone in my direction and have just moved a lot. So let me show you guys how this would look like. I don't think I got a good example on this one. Yeah, I don't think I really got a good example on this one. Yeah, no, there was no good example. There should have been another example over here. Hmm. Or maybe it was on Spy. Yeah, I think it was on Spy, but that was for this one. Let's go on Spy, and let me try to find an example. Okay, so here's the example that I was talking about. I don't know if I recorded this already in the past, but if I did, then oh well, fuck it. But this is what I'm talking about. So this was a trade that I took on Thursday, and what I was seeing was that it started dropping, and it actually did crazy. Like it dropped crazy to the downside. But what I was seeing was how once it tapped into this blue EMA, this black EMA, it rejected perfectly, and then it just started dropping even more. So like that's why I had it here. So next time, what I was thinking is enter off of this and have a really tight stop, because this is just me trying to catch extra. Like I'm just trying to catch the whole move or trying to catch more of the move, and then have a target like from here to here and just catch something. And I could catch like an extra couple an extra percentage, right? So something like that. Or even really, like, I could have my target. Okay, this is my target, so let me do something like this. Boom, boom, and then my target would be right there. So I would go on to the 1 minute, and then my target would be this down here, and that would be like an extra push that I could extra trade that I could take, because I'm not really like I'm capitalizing off of the whole move. You feel me? Like I'm capitalizing off of everything. I'm not just entering just because I think, or just because it tapped into an EMA. There's history behind this. It tapped into the zone. I entered off of this rejection, and instead of like trying to hold the whole way through, just get out, wait for a little pullback, wait for a good rejection, and then enter again. So I'm definitely going to be testing this out next week. Because I've seen this happen time and time again with the EMAs. I'm always testing new things out. But for me personally, I'm not going to use this. Like, I'm not going to turn on the EMAs until I want to get in that second trade, until I want to hold in a little longer, because the EMAs do mess me up on my initial entry. Like right here, the EMAs, I don't think they crossed. Yeah, I don't think they've crossed yet. They were just kind of consolidating. So I wasn't 100% sure on this type of trade right here. So what I did instead was I was like, man, let's just be patient and let's just wait and see how it reacts into any further trades, and that's exactly what it did right here. But on AMD's trade today or yesterday, it didn't do that. So that's another thing, and I'm okay with that. Like, if we look at this right here, if we look at AMD, the trade that I was just showing you guys, I don't think it came into the EMAs and tapped in at all. So that's just one thing to keep in mind. Yeah, like right here, it was very close. It pulled back a little bit. It just never really tapped into here. And then not even that. I mean, this did right here. So this could have been a good trade. But like I said, 0 DTE, this would have been a lot of consolidating. It would have hit my target, which would have been this down here, but I'm not sure about it because it's a lot of like this right here. It's not even worth the trade. But this is what I'm talking about right here. So let's say this right here closes right here. Stop loss can be maybe something tight, like let's say this right there. That's not that tight, but we can do it like half, and target can be this low right here, boom, right there. Because now what we're doing is we're just entering off of just continuations. Like this is just continuing to drop in the direction that we intended it to drop. So boom, entry right there. I don't really see another entry, but yeah, you get the point. And one another thing that I do wanna bring up is that these are lagging indicators as well. So these won't appear until like the candlestick's already closed. So it can be a little tricky when it comes to that. But that's why I'm gonna be testing it out next week. If it works, then I'm definitely going to be posting about it and telling you guys. But this is just another way how I was thinking that I can catch more of my trade that I already took, right? Because it's cool that I took this trade and look, it was right. It was a good it was a good prediction, not even a prediction, but I reacted perfectly because look, it tapped in and rejected. But it's also good if I can catch more of that trade that I reacted to perfectly. So that's just another method that I've been trying out, that I've been seeing as well. We're gonna have to test it out, but other than that, like I said, the three things that I look for, like I said, market structure, supply and demand zones, and entry models, they all work wonders. Like I'm telling you, once you master this, and obviously, of course, your emotions, trading becomes easy. Like now, trading, all I'm looking for is those things, and that's it. Like that is literally it. But the biggest key I will give you guys, uh, the biggest key and the thing that really changed the game for me is being patient at those crucial moments. Like understanding that if I miss this trade, I miss this trade, but I'm gonna be patient because I need more confirmation that that it wants to reject, or that it wants to react, and it wants to react bullish. So stuff like that. Those are things that I think are really important when it comes to taking these trades like this. Is being patient because like I said, you end up losing because of a trade that you got into early. It's the worst feeling. So being patient is one of the best things that you can do. Be patient, wait for that trade to play out. Once it plays out, boom, you're done, right? Enter is better. You enter and at least capitalize off of a little bit of a trade than capitalizing off of capitalizing off of nothing, right? Getting into early and capitalizing off of nothing. So yeah, that was basically it for the trading week. There's a lot of good trades that went down, but we can break those down later in the future. So other than that, that is basically it. And yeah, that's basically it. Like the video though, like the video.